Welcome back to the channel, everybody. It is June 22nd, first thing in the morning. And yeah, Bitcoin has slumped again further as China tightens crypto crackdown. So, are we entering a bear market? I know there's a lot of fear out there right now, and we had this death cross a couple of days ago, and since then everybody's been calling for a bear market. But um, yeah, I don't know. Let's kind of see what's happening out there in the crypto world today. How y'all doing? So yeah, I am buying. I don't know about y'all, but I'm buying because these markets are cheap. I mean, we got some great discounts, but just in the last couple hours, Bitcoin has been bouncing upward. We have not broken the downward trend, but we did get somewhat of a bounce here. It doesn't really mean much until we break this downward trend. Once we start seeing some higher highs, then maybe yeah. So ADA was super cheap today, coming in at about $1.15. Actually, it looks like it hit, yeah, about $1.12 earlier on today. So all you Cardano fans picked up some cheap ADA, and Vechain 7 cents. We also had a bounce on Vechain, some high volume coming in, some serious buying pressure from the bulls. So it does look like we're getting some continuation here. So let's see kind of how this plays out. But yeah, so just so everybody, just to bring back your memory, every bull market we go through this China FUD, right? So it's like China banning Bitcoin, and then they loosen it up, and then they, blah blah blah. But I don't know. Apparently, it does look like some of the miners are leaving China and heading west. So yeah, that might be a good thing though, because let's face it, China is not a stable country, and any influence over Bitcoin. I mean, what I mean by China is not a stable place is just that there's just a lot of potential aggressive action from their government. So the less Bitcoin mining going on in China, the better, as far as I can see. So yeah, so it does look like we got this death cross. So let's just take a quick look at what is a death cross anyway. So it's when the 50 and the 200-day moving averages cross. So what does it mean? Bitcoin, blah blah. So crucial for Bitcoin is the ability to hold above its May 19th low of $30,000, which is an initial target for bears. Breaking below that level would reinforce the negative signal of the death cross. So is the death cross infallible? No. Technical analysis indicator is perfect. I have a hard time believing it, including the death cross in isolation. Most chartists use a combination of studies to derive directional signals. For example, the death cross on the Bitcoin chart occurred on March 20th, March 2020, after the cryptocurrency had plunged nearly 60% over a 60-day period, and just before it started a historic rally of more than 1,000% over the next year. So yeah, so during the COVID-19 crash, we saw the beginning of a bear market follow a death cross. So I would not put too much into the death cross. So I have a question. So do you think that we entered a bull market, saw this amazing surge of buying pressure, and we went from I think it was $19,000 a Bitcoin to $65,000. Do you think that in a matter of just a few months the bull market is over? um I don't know, but I do know that market manipulation is a great tactic used by many whales and big investors to try to scare out investors so that they can pick up the cheapest assets. So I don't know, but I am not selling because if we are entering a bear market, I mean, here's the thing. Uh, it's probably going to be a short-term bear market. I mean, we probably enter into a bearish trend for about a few months and then probably start to rally back up again. So I don't think so, but I could be wrong. I'm not a financial advisor. This is not financial advice, but here's the thing. The markets, I mean, there's been a lot of bullish momentum and a lot of investors, hungry investors. So, but I did want to talk to you guys a little bit today about some hedges against cryptocurrency, just in the event that you're looking for some alternative investments. So I wanted to talk a little bit about quantum computing, because quantum computing is actually one of the leading killers of cryptocurrency, or not leading killers, but it is one of the potential killers of cryptocurrency. So, I unveiled one of Europe's most powerful quantum computers this week at its German headquarters. This marks the first quantum computer outside the U.S. And so, yeah, I mean, it's pretty interesting turn of events. And so I wanted to talk a little bit about uh, quantum computing. I mean, there's a lot of stuff out there that says that blockchain is not vulnerable to quantum computing. But this technology represents the biggest competition to blockchain technology and boasts far greater speeds than any existing supercomputers out there. So IBM hopes to use the machine that they released in Germany this week to develop new materials, medications, and artificial intelligence. So apparently, the German Chancellor Angela Merkel said that the new quantum computer could play a key role in their efforts for technological and digital sovereignty, and of course, economic growth. The expected timeline for practical use of quantum computing is around 2 years, they say. So these economic and financial functions can compete directly with cryptocurrency as the leading technology for financial systems. While cryptocurrencies have first mover adoption, quantum computers may be far more advanced and capable than any blockchain technology on the market. In fact, this could make any of the DeFi payment systems completely obsolete. And this new quantum computer is expected to come out around the same time that the blockchain technology is expected to gain mass adoption. So, in and around 2023. So I've been researching stock in quantum computers as a hedge against my crypto. And so I'm going to share a few with you guys today. And I did some research on these. And this is from NASDAQ. So Alphabet Inc. is Google's multinational publicly traded quantum computer company. So Google is in the quantum field and is currently being traded at $2,400 a share. And that is up around 35% in the past year. NVIDIA Corporation is a quantum computing stock that has taken the world by storm, currently being traded at $745 and has doubled in the past year. So NVIDIA is apparently they're pioneering work in graphics processing, and their GPU, or graphics processing unit, is used by millions worldwide. So Applied Materials Inc. was the next one that I was looking at, and which apparently they make many of the advanced display chips for quantum computers. So Applied Materials Inc. trades at about $131 a share and has doubled in the past year. So there you have it. That is the top 4 quantum computing stocks. And, I am doing some further research into some of the newer organizations coming out that are manufacturers of quantum materials. So I will keep you guys updated on, the potential of quantum computing stocks over the course of the next couple of years. So one of the risks with quantum computers is that the Bitcoin blockchain can be hacked. So I did a little bit of research on this, and I found out that 25% of all Bitcoins in circulation are currently at risk from quantum attack. The truth is that pay to public keys, or P2PK wallet addresses, are the most vulnerable, especially if that wallet has sent or spent a Bitcoin before. As you guys know, every transaction is logged on the Bitcoin network, and anybody can go on and see that wallet address. Crypto technology has improved its security over the years, as well as many of the user features, such as changing the wallet address every time that they are used. But back in the day, wallet addresses were particularly vulnerable, and some still might be today, such as was used by Satoshi Nakamoto in his first Bitcoin transactions, or many of the early miners in the first year of Bitcoin's existence. Those wallets still contain Bitcoin that would be especially vulnerable to quantum attack. There are about 4 million Bitcoins held in these vulnerable P2PK wallet addresses to this day, mostly stored by miners from Bitcoin's first year of block production. Many of the owners of these wallets likely lost their private keys and are just waiting for a quantum computer to come along and scoop up their coins. Well, Bitcoin's original technology did not have the security features that third generation blockchains currently have. So I don't know if you guys have ever used some of the Cardano wallets, but if you're using Uri or Daedalus, it gives you the option to generate a new wallet address every time that you're going to make a transaction. So I do believe that is very smart practice for all you crypto enthusiasts out there. So yeah, this is some pretty scary stuff. That a lot of investors are very concerned about quantum computers. If you think you might have some Bitcoin in a P2PK address, one option is to move them to a P2PKH address. So a lot of these newer wallets like Trust Wallet or current exchanges, they all use enhanced security features, but I would recommend that I would just make a suggestion that you turn on all of your security features, including 2FA security features, and do your best to protect your investments, because I know it takes an extra step to log in. You have to get the Google generated code and everything to log in, but it does protect your assets from being hacked by a quantum computer. The risks from quantum computers do not stop at wallet addresses, though. First, even if these older wallets are not that many, any Bitcoin stolen from a quantum computer will most assuredly crash the market. Investors will lose faith in the Bitcoin system, all of the crypto system. And I don't think it would be good for crypto if any Bitcoin was hacked. Alternatively, though, if quantum computing gets far advanced, it is possible for these computers to figure out the private key faster than the miners can mine the Bitcoin, which would need to be under 10 minutes. The only solution will be to transition to a new type of cryptography called post-quantum cryptography. While researchers are investigating quantum-resistant blockchain technology, there are challenges with quantum-resistant code, which makes many of the applications much more challenging to run. A lot of our DeFi protocols out there currently running on Ethereum, I won't get into too heavy of the technical stuff, but they all use one-way transactions and or one-way code, and quantum resistant blockchain code would require the blockchain to go in both directions. So So yeah. Um, so let me see here. I did have some information that I had pulled up in this. This is called Hacker News, and this is like an underground developer forum. And I was looking through this earlier today, and it says Bitcoin addresses are not public keys. They are the hash of the public key. Therefore, you cannot use a quantum computer to derive the private key from the address alone, since the hash function is quantum computer safe. The public key is only written to the blockchain when you spend coin from that address. So at that point, a quantum computer can attack the key. Thus, it's important to never reuse an address once you've spent it from, and always spend the entire amount by using a newly generated change address. So there you have it. I will put this link to this forum in the description so you guys can check this out. There is some really good information in here about protecting yourself against quantum attacks. So I won't bore you with all the details, but I do think that it might be worthwhile to consider a hedge against cryptocurrencies in the next 2 years, and it might be a good idea for me to start buying more and more stock right now while it's low. Because once quantum computers make their big debut, be quick process. When the stock starts climbing. So yeah. So today, I have a few things to talk to you guys about today. And to add a little comment about the new Taproot Protocol being developed by Bitcoin. Bitcoin has recently proposed the Taproot Protocol, which many of you guys know would make obtaining these addresses more difficult. All wallets and exchanges today have improved security measures, such as the generation of brand new addresses every time a transaction takes place. The Bitcoin upgrade called Taproot will improve the coin's fungibility. And basically what it does is it hides the digital fingerprint of every Bitcoin. Basically, the digital fingerprint of every Bitcoin makes some coins more valuable than others. For example, if I acquired some Bitcoin from that was mined in China using coal or some other non-clean energy source, that Bitcoin could be less valuable than Bitcoin mined with a sustainable energy source. So this Bitcoin protocol apparently will hide the that digital fingerprint. So the risks associated with receiving Bitcoins that originated from a long list of questionable places has been the catalyst for this new protocol. Miners will make the Bitcoin network more secure and robust following this upgrade, and it is set to go live in November. So, the United States has been in the lead as far as AI research for a long time. And, just like we had a, nuclear arms race back in, the Cold War with the Soviet Union, there is a technological race going on, between the West and Asia and the East. With respect to technology. So, and China has been really stepping up their game with respect to AI research. So, China is rapidly gaining ground on the U.S. in artificial intelligence research, according to the new report, heightening Beijing's challenge to its strategic rival in the field deemed critical by the Trump administration. So about 47% of all these research papers came from the U.S. in 1992. However, only 29% do now. And so China has been really stepping up their game. And so I wanted to bring this up because, and the reason why I think it's important is that in a recent comment by the Vechain strategic advisor, Jackson Fu, he's been tallying up all of the different partnerships while trying to explain what his motivation is to get the billion-dollar companies to join the Vechain network. So, geared towards corporate implementation, Vechain managed to bring new strategies and solutions which allow its partners to run business at scale. He went on to say that Vechain Thor public blockchain is already looking like the number one choice for building real-world products. And so I was doing some research into VeChain and their partnership with Cream. Okay. And, this kind of went under the radar back in February. So Cream is one of VeChain's largest partners. And they're connected to BitTrue, which is an exchange. So it appears that Cream, a multimedia and marketing organization, is a sister company with VeChain through Jackson Fu, who is a co-founder of Cream. So the relationship appears to have deep mutual interest in China's 5-year plan to implement smart cities. So the U.S. is still in the lead as far as AI research goes, yet China's quickly approaching. President Trump issued an executive order just before being ousted from the White House. The executive order was directed to federal agencies to prioritize and develop budgets for AI research. So the reason why this is important is, with the highly controversial subject of anticipated crackdowns by Chinese regulators, this current article recommends investors to seek out coins that the Chinese government endorses. VeChain appears to be remaining stable as the bears are hammering the markets this week. So, but anyway, more recently, the Chinese government released a statement naming 6 cities in the country that will support their smart city technology. Those cities, Beijing, Shanghai, Guangzhou, Wuhan, Changsha, and Wuxi, are currently the epicenters of technological advancement. At the center of this technological innovation is blockchain technology. So, there's some interesting cryptocurrency companies working with the Chinese government around smart cities, and Walton Chain, IOTA, and Power Ledger are a couple of the others. But one interesting relationship that I found existing between Cream, VeChain, between Cream and VeChain is Mobi. So Mobi is, they are a vehicle identity, usage-based insurance, electric vehicle grid integration or EVGI, connected mobility data marketplace, CMDM, finance securitization and smart contracts, FSSC, and supply chain. Mobi's approach. So here's an article. Major automakers, startups launch mobility open blockchain initiative. BMW, Bosch, Ford, General Motors, Renault, Accenture, and IBM create a consortium to explore how blockchain will reinvent mobility. So part of the some of the partnerships with Mobi, Mobi's partners include all of these different big time companies, and then you've got Ocean Protocol here, and then you've got VeChain. Why that's important is that VeChain has been at the center of the smart city development in China. So widespread development of smart cities in China is edging closer. So in recent years, everyone has become aware of the fact that we live in an extremely dynamic business environment full of technological innovation. And the roadmap for development of these smart cities is the Hangzhou City Brain. And it is a system that was designed by Alibaba in 2016 and uses artificial intelligence for managing traffic congestion. So applying AI into social structures is both amazing and pretty scary. With applied technology to make the city more efficient, the public will be incentivized to participate. So if you want to get out of traffic or you want to get your welfare check, guess what? You need to participate in the digital revolution happening in China, and the goal is to pave the way for future development outside the country. It has been coined the Digital Silk Road. So the roadmap is that these smart cities will begin in China and then expand outward to a lot of their territory. So many people have concerns that the communist country will use this technology for surveillance on its citizens, and the U.S. is listening. With the Fed in talks over their own digital dollar, we may be one of the stops on the digital Silk Road. Who knows, though? But the United States has been interested in their own CBDC, and it's pretty scary to consider a cashless society where we wouldn't be able to be able to spend any money without actually being tracked by the IRS. So some of the technology solutions being explored in these smart cities is smart payments, where blockchain will be used to facilitate all welfare-based payments, payroll for government and city workers, and banking. Identity management systems will be built on blockchain, providing a secure mechanism for storing and validating user identities. So this will reduce thefts and fraud, apparently. I won't go into too much of the details here, but transportation management will bring new technology for ride sharing and peer to peer transportation services. So Uber better watch out for this one. Keep your eye out for cryptocurrencies that are developed for ride sharing, because it seems that these smart cities are going to be really trying to reduce the congestion on the road by using peer-to-peer ride sharing services. So smart energy will allow peer-to-peer energy purchases as well as trading energy. So pretty interesting. I won't go into all the fundamental or the technical details here, but if you come across investments, cryptocurrency investments for energy trading, that is one of the biggest focuses of one of these smart cities, and blockchain technology will digitize government services such as for voting, ownership of assets like car registration and titles, and will automate just about every bureaucratic process, including paying taxes. So the Daily Hodl released this article today or a few days ago, saying that the Weiss Ratings released their scores on Friday, scoring 5 altcoins in the excellent range in the technology domain. According to Weiss Ratings, Cardano, Polkadot, Tezos, Cosmos, and Phantom are technologically superior to competitors. These excellent ratings score significantly higher than Ethereum, which only received a good Weiss rating. The Weiss rating uses thousands of data points to rank crypto assets in categories such as technology, adoption, investment risk, and market momentum. Weiss Ratings have been providing financial market research for more than 30 years and published its first crypto ratings in early 2018. So it appears that, a lot of these third generation blockchains are really gaining some momentum. Cardano has, recently partnered with Tanzania, which, apparently is pushing for the adoption of Bitcoin and other cryptocurrencies. So Cardano's Charles Hoskinson stated in a recent comment to Elon Musk that Cardano is much better investment than Bitcoin or Ethereum. He went on to say that Ethereum is overrated. He criticized Ethereum's network by highlighting the lack of vital qualities and lack of enterprise and government adoption. The Cardano founder says Elon Musk should consider turning to ADA because the project is one of the greenest and most eco-friendly digital assets. He shared his opinion that if Tesla really cares about environmental sustainability, they would consider the benefits of proof-of-stake blockchain platforms, such as the proof-of-stake system like Cardano, that is much better in terms of energy consumption compared to rivals in the market. Charles said that Cardano and its native digital asset ADA should be the first choice for Tesla. Apparently Tanzania may be the next country to adopt Bitcoin. And, Tanzania has already partnered with Cardano for their financial system. However, the central bank received a call from the president of Tanzania the other day saying that they should not get caught with their pants down. Tanzania is exploring the possibility of becoming the next country to make Bitcoin legal tender and adopt cryptocurrencies for payment remittances. Payment remittances contract is with Cardano, and that has been confirmed. Tanzania is one of the countries in dire need of financial services, and they have recently partnered with Cardano. A lot of crypto adoption spreading across Africa. The SEC delayed the Bitcoin ETF application once again and pushed the deadline back to August. This is the second time that the commission pimp-smacked an attempt at approving a Bitcoin ETF. They cited manipulation, a lack of transparency, and inadequate regulations in the crypto markets as the key reasons for its decisions. In other news, Morgan Stanley aims expansion of Bitcoin fund options. So the Goliath of centralized banks, Morgan Stanley, has been making moves to get cryptocurrency. The New York Digital Investment Group, or NYDIG, filed paperwork with the SEC for a new investment fund following increasing demand from its customers. NYDIG is a financial services company dedicated to BTC. The bank embraced Bitcoin funds back in March, even though it had been known as one of the biggest skeptics of cryptocurrency. Morgan Stanley's wealth management clients are now expecting more options for getting into BTC. This will not be the first investment fund created by Morgan Stanley, though earlier this year they released the FS NYDIG Select Fund, the Galaxy Institutional Bitcoin Fund, and Galaxy BTC Fund. These funds have very high barriers to entry, with previous funds set at $25,000, and the latest Galaxy Institutional BTC Fund is set at $5 million just to enter. So it looks like whales are coming in droves. Get your Bitcoin before it all runs out. So they're banging on the door for $5 million investment into Bitcoin. What's funny is that I thought that it was pretty funny that here we are, everybody's calling for a bear market, right? And that we're gonna, see the biggest crash of all time, and yet Michael Saylor is still buying Bitcoin, like tons of it. The software company MicroStrategy is currently holding more than 100,000 Bitcoins, valued at more than $4 billion. The firm has completed a $500 million offering of secured notes. And once the notes have sold, Michael Saylor will buy more Bitcoin. In a recent interview, Michael Saylor stated that he would sell his mother's dentures if they had gold in them just so he could get more Bitcoin. So it's pretty interesting that everybody is like sort of calling for a bear market, and we've got major banks buying, looking to buy as much Bitcoin as they can. We've got investors ready to spend a minimum of $5 million just to get into Bitcoin. And we got Michael Saylor just loading up, selling everything, including the kitchen sink, to get more Bitcoin. Sparky Manipulation is a type of market abuse where there is a deliberate attempt to interfere with the free and fair operation of the market, and most blatant of cases involve creating false or misleading appearances with respect to the price of or market for a product, security, or commodity. So even though it's illegal, stock bashing. This scheme is usually orchestrated by savvy online message board posters, aka bashers, who make up false or misleading information about the target company in an attempt to get shares for a cheaper price. This activity in most cases is conducted by posting libelous posts on multiple public forums. The perpetrators sometimes work directly for unscrupulous investor relation firms who have convertible notes that convert for more shares the lower the bid or ask price is. Thus, the lower these bashers can drive the stock down by trying to convince shareholders they have bought a worthless security, the more shares the investor relations firm receives as compensation. Immediately after the stock conversion is complete and shares are issued to the investor relations firm, consultant, attorney, or similar party, the bashers then become friends of the company and move quickly to ensure they profit on a classic pump and dump scheme to liquidate their ill-gotten shares. So there's just a lot of different stuff happening in the markets these days, and I would not be surprised if we just see an absolute parabolic blast off, even though everybody's calling for a bear market. I just think this is market manipulation. We just entered the bear market, and they're just trying to shake folks out. Bitcoin Bitcoin, Ethereum, Cardano, they're all approaching a liquidity crisis, and the available supply is growing less and less. So don't fall for it. That's all I got to say. So that's all I got for you guys today. I just figured I would touch on some of the smart city stuff happening in China. China is trying to scare away the Bitcoin miners, but they have a very deep interest in using cryptocurrencies for their smart cities. So, investments such as Vechain or IOTA may be something to consider, since a lot of these technologies will be run on the blockchain. And the SEC obviously will continue to threaten, but as we had a release of an article just a couple of weeks ago that said that the SEC had no interest in launching or releasing any cryptocurrency regulations in 2021 or 2022. So I do not believe that there's any thing to worry about there. And the overall markets are just bouncing back up right now. So VeChain has climbed up quite a bit just in the last couple of hours. Shiba Inu is cranking them up all the way up to 688 millionths, and Bitcoin has climbed up to just about 33,000. So get your bargains before we break this trend. I think if we were able to get above the 200-week moving average, I do believe that we will see a trend reversal. So that's really all I got for you guys today. Just some fundamentals. Don't stress too much. Don't get shaken out. And just have a good time. Peace out.